Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 24th of April. All right, now let me just try and help you pick the eyes out of the market this week. Now, there's a number of key things. Now, first of all, you have to understand we are entering the last week of the month, right? And it doesn't mean there's no significant numbers coming out. It can sort of change from here to there, but there are a few good releases coming out. But what we will be sort of anticipating is the releases that come out this week will go some way to helping us shape the activity for next week, okay? And that's primarily because the start of the week, or start of the month, I should say, we have some key events happening, right? Central banks. So if I just scroll down to next week, and this sort of puts everything into perspective, right? So you don't just work on a week-to-week basis. Think of the bigger plan and the bigger sort of calendar to work out how things are going to connect. Start of each month, we get the RBA, okay, the first Tuesday of each month. That's all well and good. And so you've got the RBA, we've got the Fed, okay, and we've also got the ECB, all right? And where is that ECB? Here they are in here. Okay, so we've got three central banks, okay, coming out with various aspects. Now, the Fed, well, just reading the various articles, it's 89% factored in that they're going to raise by 0.25% at their next meeting, right? So that means there's still a chance, right, that something can go wrong. And what I'm talking about is, this is where you can piece together the dots. So coming back to this week's data, right, it fits into a bigger plan. So just going through the major numbers now on trading economics, I've got the sort of medium and high impacting numbers, right? The IFO business climate, for sure, it's always a good measure of what's happening in the Eurozone. Now, as we sort of scroll down here, there are some numbers that will pop up. Now, we know in the back of your mind, you've got to be thinking, okay, the US, okay, they're raising rates on the 4th of May. So the numbers here will do two things, okay? Consumer confidence, S&P, or the Case-Shiller Home Price Index. We get stronger numbers here. It just confirms that 0.25%, right? And that's all we're sort of looking for at this point. So as you come down now, we do have the RBA next week, the inflation numbers. This is where you can come back in, have a look at what the RBA said in their last statement. Okay, they still want inflation back down towards, 2% year on year, and it's up around 7.8, or the indicators at 6.8%. So still a lot of work to do, but this will go, once again, it relates to their last statement and what will happen next Tuesday around the interest rate decision. Then you come back into, we've got a bunch of US numbers, okay, durable goods, okay, also, well, GDP growth, it's not such a big deal at the moment. GDP comes back into play, right, when inflation is pretty neutral, right? It's in the 2 to 3% zone. It's not moving. That's when GDP really shines and becomes a thing. At the moment, it's the independent numbers that are giving us the clearer direction. All right, you got pending home sales. Now, we do have the new, the BOJ. I was going to say we do have the new BOJ governor, okay, having his first meeting. Now, there's talk about them sort of adjusting their yield curve control measures. Okay, so that's something interesting. Kazuo Ueda is the new BOJ governor. So will he change something straight away? I don't think so, but you never know. I mean, it'd be pretty drastic, right? You get the top job and then you come in and go, you know what, we're changing everything. So I think he'd want to see the lay of the land before they make changes, but that's going to be a potential risk event on Friday. So that's this week, right? And you come back down. I mean, we've got more GDP numbers. Once again, these are sort of more factors when everything's well and good. At the moment, things aren't well and good because inflation's out of control. Now, Friday, PCE price index, right? This is one of the last big key numbers before we hit the Fed next week. So that could be the last, well, not the nail in the coffin, but if these numbers are strong and durable goods are strong and the other US numbers are strong, well, you know what? The rate hike next Wednesday is fully factored in, right? That's where it will be. If these numbers come out dramatically weak, and it doesn't look like they will, well, then we might see some of that interest rate roll back out, right? And so this is the way you've got to plan the week. Now, and obviously the start of next week, start of a new month, all the big data comes out. So what you're trying to do this week is just piece together the opportunities with what's going on in the various instruments, Okay, and I'll come into the technicals in a second. So then you can sort of piece together the dots and the next key event, which is obviously the central bank announcements. So just coming back over here to the technicals, right? Now, we are in a state where a lot of the central banks are somewhat confused, right? They've raised rates very aggressively and inflation stalled, but it's so far away from their targets. The markets are in limbo, right? And they're getting sort of pushed around a bit. Now, just having a look on the hourly charts here, you can see here the dollar index, yeah, it's going down. This is one reason why trading is a little bit inconsistent at the moment. Now, it's long term, it's going down, but it's just trading sideways the last week, right? We're in this sort of little trend channel. Dollar yen, so the dollar overall is going down, dollar yen is going up, dollar Swiss is going down, and dollar CAD's going up, right? So you tell me, is the dollar going up or down? Usually in this scenario, you'd look at the dollar index, but it's not clear, right? There's different things happening, right? And this is because we've got situations where, like dollar CAD, okay, oil is the big driver here. Now, dollar Swiss, it is trending down, and it's caught up in a bit of the safe haven trade. Same as well, I was going to say dollar yen, but the dollar yen is its own beast. It has got the BOJ sort of situation, the yield curve controls. It's been going up since they sort of adjusted that months ago. Does that continue or not? I'm not so sure. But the weak dollar across the board isn't exactly apparent, right? You look at the dollar block, say euro, sterling, Aussie, and Kiwi, right? And you can start to see there's a little bit of euro's going up, just trading sideways now. Sterling raced to the top side, now trading sideways. Aussie, well, it was drifting lower, now just drifting sideways. Kiwi is the odd one out here. Okay, it's trading lower. Now, if I just clear the charts here, now to make identifying what's happening a little bit easier, I've drawn in some trend channels. And this is something that you probably should get a little bit more familiar with. Okay, so just looking at dollar yen, okay, short-term basis, there's a nice sort of trend channel going up here. Now, what does that mean for me? It just tells me, it highlights visually what's happening. Okay, now these trend channels obviously can be significant levels. Dollar Swiss is probably the best trending instrument, and dollar CAD short-term. Dollar CAD is a very big trending instrument, especially when oil starts to get a bit of a angry head on its shoulders, right? So oil rallies aggressively, then it starts falling. Now, this is all controlled by OPEC, right? If they say they're going to increase supply, well, oil's going to fall dramatically and dollar CAD will race to the top side. But you look at the other pairs down the bottom here, euro, sterling, Aussie, okay, not exactly giving us really clear, say, trend channels. But then you come back and have a look at the Kiwi, it is, right? And I think Kiwi is potentially one of the better trading instruments going forward. Now, what we need to do is just have a look at these instruments with the trend channels to see what is going on, short-term and long-term. Okay, so dollar yen, just having a look here, you can see very clearly we've got a bit of a trend channel going on here. We've got support down around 132. There's a support trend line around 133.50. At the moment, it's sort of just drifting. You look on the long-term frame, right? And I've just blown this up a little bit. Let me just get that pen. You can see there's the trend channel, but it's not exactly setting the house on fire long-term, right? So we've got a situation where, yeah, it did break higher above the cloud, but it's back in the cloud. So we're sort of drifting here with no clear direction. I mean, has broken a little bit higher, but it's not convincing the price action by any means. Okay, so I'm like, well, you know, do I get into that? Well, you have a look at the bigger, longer term time frames, and you have a look here on the weekly and the monthly. It's not exactly clear it's going anywhere, right? So this is the idea. We see what's happening here. Does that mean we've got to trade on? Not necessarily. Okay, it has broken higher. It's back in the cloud, maybe when it goes through the cloud. You just want to have the framework in front of you so you can make decisions. Now, the second pair that had a trend channel here was dollar CAD. Okay, very solid trend down, sort of a little bit of a retracement, and then aggressively down as oil rallied once again aggressively. Now, that's sort of winding back a bit. You can see this sort of trend channel. It's a good trending pair like the Swissy, but on the dailies, it's just back in the middle of the range, right? So you're like, well, that doesn't tell me a hell of a lot. in actual fact, I could probably draw another trend line in there. Okay, if I just come across. Okay, that's the start of the new sort of resistance trend line. So you can sort of see exactly where it is. Now, do I look to get long dollar CAD on this trend channel? Well, daily wise, pretty hard to say. So what that tells me is if we've got a short-term chart with a clear sort of trend channel, well, that may be a short-term trading opportunity, nothing major, okay? And unless you start to get a match up with the daily charts. Dollar Swiss, okay? Now the Swissy, as I was saying, trend-wise, it looks unreal. Okay, you got 1, potentially 2, 3, 4, 5, 6, almost 7 touches on this trend line. Now it is drifting lower. Okay, you look at the longer term chart. This is the move down January 15th, 2015, where the Swiss National Bank bit off more than they could chew. So technically long term, the charts don't make a lot of sense. So in that regard, I mean, it's hard to say. It is, but the fact is it has broken down here. Okay, that's the key to it. Now, where do we get in long term? Well, this is the hard part. With that sort of blowout in 2015, a lot of traders and fund managers don't get involved. 87.54 is like the previous level here. That's the previous low. So, you know what? It's a tough entry, but if we saw significant weakness, it's not like the dollar Swiss is going to lead us with strength. But if we saw significant dollar weakness, then the dollar Swiss, I'd have to say, it's got to be worth a try, even getting short on rallies at this point. But you don't really have the backup on the dailies, except knowing that it actually has broken down. Now, come across here to the Kiwi, right? And it's very rare that I would dominate or trade the Kiwi before I had a really good look at Euro, Sterling, or Aussie, right? It's got less liquidity. But what has happened is it's the whole framework that you've got to think of. Now, the RBNZ raised rates aggressively, even went a surprise rate hike last month and super aggressive 0.5%. So the market here, the Kiwi economy is so small, when it contracts, it just does it in like an instant. And the inflation numbers last week showed us that it was quite terrible, and we should start to see, you know what, a consistent move to the downside. Kiwi long term, well, it's already broken down. The only thing hanging on here is the previous low around 60.83. I'm looking for opportunities to get short Kiwi, right? And with the other pairs, dollar CAD, Swiss, yeah, maybe. So then you just connect the dots, right? So I come back to my calendar and I'm like, okay, so what's coming out in the Kiwi? Now, this is one of the funny ones, right? Because the Kiwi, there's, well, you get the balance of trade numbers. I don't think they're going to do anything for us. There's a number here that used to be a totally insignificant number, and it's called the ANZ Business Confidence Numbers. In some reports, it's called the NBNZ Business Confidence. But this number here has the power to move the Kiwi dramatically. Now, raising rates aggressively by half, I think it was 0.5%, and if weak inflation numbers instantly, they have overcooked this, right? In fact, if I was at the RBNZ, I'd be like, fellas, we've made a meal of this. Let's unwind. Let's start cutting rates. That's how serious it is. So I can see this business confidence numbers, okay, depending on when they were calculated, being dramatically lower, back to the sort of minus 70 percentile where they were not long ago. And that will give the Kiwi a big push to the downside. We've already got the trend in play, so that's something to look forward to. But that's Thursday, right? So you're sort of piecing it together. Where do you start trading? Well, generally Mondays are a bit of a, where the markets reconnect, aren't awesome. Have a look at the numbers that are significant. Now, I can tell you the Case-Shiller numbers, normal markets, are pretty decent numbers, right? And you got the consumer confidence numbers, and the new home sales. So there's a bunch of things coming into Tuesday that we need to sort of keep an eye on. This will give us the heads up on what the dollar's doing. Don't forget, the Fed are factored in a rate hike coming into next Wednesday, right? 0.25%. And a lot of people are thinking it's hike and then that's it. One hike and done. So we'll see how that plays out. But what we're talking about at this point is the hike. Are they hiking? Are they not? 89% factored in. So we need either significant numbers here, and I'm talking across the board, for them to unwind the 0.25% in May. Okay. And then you've got a bunch of durable goods numbers, Bank of CAD summary of deliberations. That's like the minutes. You want to have a look at that, see what they're thinking. As I said, the BOJ, first BOJ meeting, from the new governor. That'll be somewhat interesting. And then you sort of click off. You've got the CAD GDP numbers. You know what? No big deal. GDP at the moment, as I said, is not a big deal. You're really waiting for Friday's personal income numbers to confirm, or finally confirm the numbers for the hike by the Fed, right? If they were really weak, it might drop back a bit, but it looks like at this stage the Fed are going to be going. So once again, looking at next week, okay, if I just come back up the top here, let's take it to just the high impacting numbers. Whoa. Okay, so this is the thing too, because you got to factor this in as we go forward. So central banks next week, you got the RBA, you got the Fed, you got the ECB, right? And that's all. So they're going to be really, the market's going to pick through those statements and comments very closely. Probably means the unemployment numbers, right, coming out on Friday will be insignificant. They are the first major number after the Fed, but it's probably too close to the action unless the Fed comes out and says, you know what, we've hiked rates, that's it. Well, then that's when the unemployment numbers could come into play. So really, all our trading this week is based on what can potentially happen next week, right? Connect the dots. You're not going to see a significant move in any of these instruments whilst the Fed meeting is a week away, all right? So unless there's a major catastrophic event. So to me, you just got to map that out. So this week, look for opportunities, but they might be sort of short term. And what I'm talking about is a day, 12 hours, 16 hours, 24 hours, something like that. Okay, there might be a little bit of a flush out as we get closer to the end of the week. But to me, the pairs to be focusing on are the ones that have these sort of short-term trend channels. They could make it a little bit easier to identify the trading opportunities. Like by all means, Euro, I keep like the idea of getting short Euro. Now, the ECB next week are expected to hike rates. So we've got to wait and see. You see these pullbacks in Euro, they are just the result of like big knee jerks. And what you get is you get the breakdown, but then it keeps going up because overall the dollar index is going down. Okay, so that's what we're dealing with. The dollar sort of breaking down. So are Euro, Aussie, Sterling, Kiwi going to go up? Probably not. But you know what? They could go down quicker than the dollar. And that's what we need to be focusing on. So this week, guys, as I said, there's a range of data releases here to have a look at. And I wouldn't be rushing in like banging the numbers, right? You can become a junkie, right? An economic number junkie, like just trading the releases. Trade the big picture, okay? Connect the data, sure. If it's breaking through short-term support and resistance lines, by all means. Now, the inflation numbers are a bit more intrinsically connected to the central bank, so they have a more of a significant move. So if we see significant numbers here in the Aussie inflation numbers this week, it can go a long way to what the RBA are going to do the following week, right? If these numbers drop off the radar dramatically, well, I tell you what, the RBA will give themselves a pat in the back for not raising rates last month like the Kiwis did. And they may be talking about, not necessarily cutting rates now, but staying on hold for a significant amount of time. That's next week. So goes a long way to being the interest rate decision for next week. And the statement will come out of what these numbers are. Excuse me. And don't forget that ANZ business confidence numbers. It's a cheeky number, but I tell you what, it can really significantly shake the house. So keep an eye on that and keep an eye on all those US numbers. All right, guys, that's it from me. A bit long-winded, but I just wanted to explain to you where the market was, okay, what we're looking for, and how to connect the dots with the various releases, okay? And in doing that, you'll keep ahead of the markets. You won't start trading opportunities that are really not going to be moving the markets at this point. So just factor in your capital management to the trading opportunity, bigger opportunities next week around the central banks. But some of this week's data can give us the answers to what is going to happen next week, right? That's what you need to understand. All right, guys, have a good one. All the best. Cheerio.